ऑल राइट। सो आज हम लोग कॉल बाइंग के बारे में बात करेंगे। कॉल बाइंग is a strategy which we should call it is a bullish strategy. Okay, bullish strategy means कि अगर मार्केट ऊपर जा रहा है then you can buy a call, but as you can see this is a sensible platform. All right, and as you can see, let's say today is, what is the date today, 28th December 2024, right? So if the market is going up, then we buy call, let's say of 2nd January at the money. Okay, so the point is, if we see the Greeks here, so what does the Greeks suggest? Theta, decay, and gamma and vega. So decay is the most disadvantageous point for a call buyer. Why? Because as you can see, if you had bought this call on Friday, what will be the status on 30th of December, that is Monday? You will be in loss of 4,000 rupees. ओके, 4,000 रुपीज़ का प्रीमियम आपका चला जाएगा एक ही दिन में, बिकॉज ये नियरेस्ट एक्सपायरी है. एंड लेट्स टेक एन एग्जांपल ऑफ मंथ एंड एक्सपायरी ऑफ फॉर नेक्स्ट मंथ, दैट इज़ जनवरी 30. अगर हम यही चीज़ फार में करते तो एक दिन में कितना जाता? जस्ट 600 रुपीज़. बिकॉज जो सबसे पास की एक्सपायरी होती है उसका जो थीटा होता है बहुत ज़्यादा होता है. ओके, सो आई मीन सॉरी, डीके बहुत ज़्यादा रहता है. सो दैट इज़ द रीज़न when we choose 30th January, it will be, the decay will be very less. It is just consuming 600 rupees in one day. Whereas 2nd January, it will consume how much? 4,000 rupees, 33% of your investment. 9 January, 2,000 rupees. 16 January, again 2,500 rupees. 23rd January, 2,900 rupees. And monthly expiry, it won't consume much, right? So because the monthly expiry is the most tradable this thing, most people trade in monthly expiries, so the Greeks over there are a little bit different. So this is one of the strategies which we call simply a call buying. It is not hedged, it is not covered, we are just speculating actually, or you can also call it investment. We are investing kind of. So there are multiple options to invest, right? One is direct equity market and future and options market. So either you can buy equity or for future contract, or an option at the money, out of the money, in the money. So right now we are taking example of at the money. So now we'll talk about the movement and the profits we can make. Okay, so let's say Nifty moves for 0.5%. What will be the effect? This is for monthly expiry. So the effect is, we just invested how much? 6,000 rupees for one lot. Okay, and today, since it is 28th December, the lot size still for monthly expiries are of 25, and from now on the minimum lot size will be 75 for any new expiries being introduced, any new contracts being introduced, I mean. All right, so at 0.5% movement, we are seeing 17% returns in one day. But what about Tuesday? What happens on Tuesday? One day later, the profit reduced by 4%. So do you think call buying is a very good option? It is an option. What is it? It is an option. We are trading options. It is an option, but is it a good option? Yeah, there are various strategies. People make money. Very less people, very less percentage of people finally make money in option buying. But you need to have you know a good knowledge of the markets, fundamental as well as technicals. Okay, and you should know the momentum based strategies in such a way that your strategies should be back tested, and if a stock or an index, it is moving as per your strategy, as per your setup, and you know the targets, and you're very much confident about the targets, then yes, option buying can be profitable. Only option buying without hedges. So yeah, let's say if Nifty moves by another 0.5%, what happens? Oh, you get a return of 43%, right? But as and when we move through the expiry, because of the decay, your profits will turn into losses. So that's why there, on a sensible platform, you can see the break evens. The break evens is for this call is 2%. So if you let's complete this example. So let's say I move on, and the profits are getting reduced day by day, and at some point it is negative now because of the decay. So if we talk about a break even, that is 2%. So at 2%, uh, you will remain profitable before the expiry, and on the day of expiry you might end up in no profit no loss. Okay, see, it's just 60 rupees loss. So this is like no profit no loss, and before the expiry you are still in profits. This is called break even. All right. So today we discussed about call buying, the disadvantages of call buying. And what are the advantages? Advantages is that, as you can see the graph, the maximum loss you will face, that is just 12,000. The amount which you paid earlier, right, in the initial investment. So the max loss 12,000, right? This is one. uh, is it calculating? I'm not sure. Margin needed 6,000. I'm not sure why it is saying that. I think it is calculating my current positions in Nifty. But just consider this 12,000 as your starting investment, and so that will be your max loss. And the best part of about call option buying is without hedges is no, I should not say without hedges, because you can always hedge a call with a put buying as well. So both side the profits can be unlimited. So we are just talking about call buying right now without covered calls. Okay, so that this is the most prominent advantage of option buying, that the profits are unlimited and losses are limited. So if your setup says that there will be huge momentum in let's say a week or two, option buying is very very good, because especially when you do not have targets. So if you do not have targets, and you think that it can go anywhere on one side, so this is the best option to buy an option. That's it all for today. Okay, welcome to Sid Stocks. This is my first learning video.